I'm Aave V4, and this is the Coin Daily. Traditional markets finally got a break. Stocks popped higher, volatility came down, and the dollar pulled back. Crypto, though, couldn't get out of its own way. Bitcoin and Ethereum are spinning their wheels, barely reacting even as last week's tension fades. There are fewer fireworks on the surface, but there's not much conviction beneath it either. Thin trading, weak participation, and uncertainty mean the quiet is fragile. All it takes is one headline or big position to tip this calm into the next swing. But that surface calm can turn fast. Today, it was Solana's turn to show how quickly the mood shifts when a major protocol gets hit. Drift Protocol, Solana's leading perpetuals exchange, reported it was under active attack this morning. The team quickly suspended deposits and withdrawals and began working with security firms, bridge operators, and exchanges to contain the damage. The exploit's scale is still being nailed down, but on-chain estimates put the losses around $270 million, possibly even more. Early reports mention a leaked private key, but the root cause isn't confirmed yet. What is clear is that the hackers quickly moved the stolen funds into USDC and Ethereum, and started bridging assets across chains, making recovery efforts much harder. For users, this meant being suddenly locked out, unable to manage positions or access funds while the team tried to stem the bleeding. For the market, the main lesson is just how destabilizing a big exploit can be in these thin conditions. When participation is low, a loss of this scale doesn't just shake a protocol. It shakes the whole mood and exposes just how quickly things can flip from calm to chaos. The focus now is on whether coordination across Solana and exchanges can recover anything, and what upcoming headlines around the recovery may do to market confidence. It's a reminder for every coin. Event risk is never as far away as it feels in a quiet tape. While Solana faces the fallout from a rapid exploit, Aave is moving in the opposite direction, locking things down with careful risk controls as it rolls out a major upgrade. Aave just pushed its V4 protocol live on Ethereum, signaling a new era for DeFi lending. The upgrade introduces a hub-and-spoke design, a central pool of liquidity called the hub, connected to separate lending markets. Spokes that each have limits set by governance. This structure means governance can cap risk in any one product, avoiding system-wide blow-ups. Not all spokes are active right now. New ones go live only after governance approval. The big differentiator this time is flexibility. Aave can now support more complex assets, like real-world loans or structured credit products, alongside the basic crypto collateral. Riskier borrowers pay higher rates, a pricing shift meant to keep the core pool safe for all users, not just protocols. For retail users, it's a sign that DeFi is maturing. New launches come with brakes on, and risk is handled cautiously instead of chasing growth at any cost. In a week full of exploits and doubt, Aave is betting that slow and steady, plus tight governance, will win long-term trust for both crypto and institutional capital. As new protocols look to manage risk, some companies are doing the opposite, selling off their crypto to deal with real-world pressure. Genius Group, a public education tech company, just completed its final Bitcoin sale, liquidating 84 coins to pay off $8.5 million in corporate debt. The company's Bitcoin treasury peaked at 440 coins just last year, but a court order blocked it from raising more money and forced a shift in strategy. That led to a first sale of 96 coins in late 2025 at around 73,000 each. The latest sale wipes out both the debt and Bitcoin exposure, at least for now, with management saying future buys are only an option if things improve. The lesson for the wider market is that even medium-sized sales can swing things during weak participation, especially when forced by off-chain events like court orders or liquidity crunches. It also highlights how quickly sentiment can shift. What started as a corporate adoption story ended as a forced liquidation. When every coin counts, even a moderate treasury move like this can amplify price reactions far more than anyone expects, especially with so few big players actually stepping up to buy. Protocols are tightening up and companies are retreating, but the price action isn't breaking out or breaking down. To see why, we need to look at what's keeping Bitcoin and Ethereum stuck, despite the trad market relief. Crypto came out of last week's crisis mode, but it's not going anywhere fast. Breadth is still weak, most coins are just spinning in the same range, and participation isn't coming back in size. To really see the disconnect, here's how stocks, gold, and the dollar performed today against crypto's stuck tape. Nasdaq is up 1.24%. The VIX is down 2.27%, gold is up 1.75%, and the dollar is down 0.18%. So, while the outside world is climbing, crypto's leaders are still boxed in. Bitcoin sits just under its reclaim zone, while Ethereum is locked between nearby support and resistance. With thin trading and no broad participation, every move to a key level gets amplified. When these taped bands finally break, up or down, the move could surprise with how quickly it happens. Right now, there's a strong focus on microstructure. Any small shift, a fund withdrawal, a big buy, anything, can set off sharp moves. That's why watching levels and tape action closely matters even more in a thin market. You see it especially in Ethereum. Every bounce keeps landing just above support at 2014, with resistance crimping price at 2160. The whole range has gotten paper thin, and both sides are looking for any breakout signal. Here's what that locked-in structure looks like in the chart. The Ethereum candlestick chart shows support at 2014 and resistance at 2160. Recent price action is boxed tightly within that range, with no decisive move above resistance or under support. For Bitcoin, the decision zone is just above 68,100. For Ethereum, the critical band is right near 2140. As long as both stay locked between these bands, expect more sideways action, even with strong moves in stocks. But this kind of compression doesn't last long. When price finally breaks, it should be fast and have teeth. The tension right now is less about which direction wins and more about who gets there first. When you have regime improvement, but none of the majors making new highs, today's story is as much about what doesn't happen as what does. For traders and holders alike, it pays to stay nimble in these environments and not assume today's calm will last. So the majors are trapped in tight bands, but there's plenty happening elsewhere. Nowhere is the battle clearer than in Polkadot, where short bets are crowding up. And price action is refusing to crack. Polkadot stands out for one of the most lopsided bets on the tape. Shorts are piling in, paying extremely negative funding to stay in their position. But even with all that pressure, price just sits at support, neither breaking down nor squeezing higher. To get perspective, here's how Polkadot's setup compares with the big names in the group. DOT is down 44.53%. ETH is down 7.85%. BTC is up 3.65%, and ADA is up 10.95%. Polkadot's short trade is the most extreme on the board, with annualized funding at negative 44.5%. Far below even the negative rate on Ethereum. Bitcoin and Cardano have flipped positive, but the key twist is that open interest on Polkadot is stuck near $43 million, barely moving, and liquidations are tiny, less than 40,000. So even though traders lean hard to one side, there's no surge in fresh shorting or forced closing. The standoff is set. If Polkadot loses support at 1.252, shorts get paid and price falls. If it holds or bounces, all that negative funding turns into a risk for shorts. The longer price refuses to break, the more pain stacks up for those staying short. With participation thin, even a small move off support could force a rush out of the trade. For Polkadot holders, this is one of the most binary setups left. Everything hinges on whether the 1.252 level holds or fails. If funding or open interest shifts in the next few sessions, that's your cue that the standoff is resolving, either as new downside confirming the crowd was right, or a sudden squeeze as everyone has to cover in a hurry. Markets like these reward sharp eyes and quick reactions more than patient conviction. Where Polkadot's tension is all about derivatives, Solana is back in the spotlight because of an actual headline event. The real test now is whether price can repair or if the damage opens deeper downside. Solana recently broke down from the key support at 83.16. That was the shelf-keeping price steady for weeks before the drift exploit. After the break, price stalled around 81, one of the tightest ranges in months. The decision is simple. Does Solana reclaim the lost level and recover, or does it lose the next support and slide lower? After major hacks like drift, how quickly a protocol stabilizes becomes the next major signal. Many are watching to see if Solana can absorb this blow and push back, or if it triggers a cascade to the downside across related coins as well. The Solana candlestick chart shows support at 80.3 and resistance at 85.2. The last candle closed at 81.17, keeping price just above support in a very tight range. Solana is holding at the edge right now. If price can get back above 83.16, it returns to the old range. The breakdown's absorbed, and the next target is resistance at 85.2. As long as support at 80.3 holds, downside remains contained. But if price slips below 80.3, the chart opens up to a deeper sell-off. With structure this tight and nerves already high from the drift news, any move out of this band could set the tone for the whole market as we head into tomorrow. It's easily the most actionable level on the board right now. If you're considering entries, exits, or tactical hedges, these are the kinds of conditions where setting alerts and managing risk become critical. The reaction over the next 24 hours could be fast, so expect volatility to spike if these levels break. Outside crypto, the rally looks real. But inside, everything comes down to whether one of these bands finally gives way. With direct shocks, crowded trades, and barely their participation, any headline or sharp move could be the spark that breaks the stalemate. Bitcoin, Ethereum, and Solana all rest right at decision points. But so far, nobody wants to take the first shot. As we head into the next session, everything hangs on which tape cracks first and what story drives that move. When participation is this thin and positioning is this lopsided, breaking these price bands may not just trigger a move, it could reshape sentiment for weeks. For now, it's about watching who blinks first. Do you think the next big crypto move comes from a fresh headline or a technical break on the charts? If today's roundup helped you make sense of the market, hit subscribe and turn on notifications. We're here every day.